Everything is rising at the end of 21 going into 2022, and I do mean everything. Let's talk about it. Hello everybody, Joe Werpik coming at you, and we're going to start off with the Santa Rally. I have been talking about this on this channel for weeks to come, that this was going to be an epic Christmas buying season. And as you can see, this is the largest increase, the best Christmas season we have had in 17 years. And boy, has the shopping been better. We've seen an increase of 8.1% more money spent in brick and mortar stores over 2020, and e-commerce is up over 60% from 2019. That means people are spending 60% more online. At the same time, they're spending 20% more in stores. People spent money, they went to the stores. We will see this reflected in the coming days in the stock market. Let's hope the Santa Rally holds strong through the beginning of next year. The Santa Rally is the last 5 days of the year and the first 2 days of the next year, and those should, on record, be the highest 7 days of market returns for the entire year. And it's starting off strong. We can see that December was up between 4 and 6%, depending upon what indice you're looking at. And on the day after Christmas, the first day back, which is December 27th, we can see all the markets are up 0.6 to almost 1%. The Santa Rally is strong. Now the question remains, how will the first 2 days of 2022 be with the markets? And that could be a harbinger of bad or good for the stock markets in 2022. Speaking of stock markets in 2022, and again, this goes back to why I always say you cannot just read the headlines, because if you see the headline in the Wall Street Journal today, pessimistic about stock market returns in 2022. Now, when you actually read the article, you can see that all they're saying is what I've been saying on this channel for weeks and weeks, and that is, do not expect double-digit returns next year. They aren't saying the markets are going to be negative next year. No one is predicting massive losses in the markets next year. What they're predicting is that we're going to go back to the way the stock markets have been for the last, say, 40 years, around 8 to 8.5%. Exactly what I've been saying on this channel, that we expect normalized market conditions next year. Now, a lot of this has to do with bond prices, because going into 2021, bonds were yielding a negative return. They still are today. In fact, 2021 is going to go down in the record books of one of only 4 years where we had above double-digit returns in the stock market, and we had about a negative, this year, negative 5% returns in the bond market. So when bonds are down and people have to put their money somewhere, they flood the money into stocks, hence the epic 20+% returns in all three indices for 2021. And over 30% returns for 2020. On top of all of that, wages continue to rise. Yes, all year long we've heard about minimum wage going to $12.50, $15 an hour, but now we're seeing the service industry, we're seeing white collar workers get raises of between 4 to 7%. And yes, I know, inflation is around 6 to 7% from last year, but as I've said before, that should be temporary, that should go away, but your raises, they aren't gonna go away. Once you have them, they're yours. This is good news. That means across the board, people have more income, and boy, are they going to need it next year to buy food, because as we can see, food prices are about to hit record high levels. And while food inflation is already about 6% year over year, we're looking at an additional 5 to 6% in the first quarter of next year, maybe as high as 20%. Kraft Heinz has come out and said that they could raise prices as much as 20% next year on prepackaged food. Take Grey Poupon, for instance. It's costing Kraft Heinz about 22% more this year to produce Grey Poupon, and they're expected to increase the price of it between 6 and 18% next year. And that's just what they're saying now. That's what they're willing to reveal, show behind the curtain. But we will see all food across the board become more expensive next year because of labor costs, logistics costs, and packaging costs. So labor costs, what I just said, everybody is getting paid more. Logistics, that's the trucking industry. It's costing more money to get trucks out on the road because we have a shortage of drivers and we have to pay those drivers more than ever before. The average long haul trucker is making 6 figures, which is great. I'm happy they're doing well. And packaging costs and actually ingredients costs. Oil, flour, sugar, all of those are becoming more expensive. And if you're purchasing pre-packaged foods, you will see a cost increase next year. And if you're buying heavy foods like potatoes, even though these are produce, they are going to cost more next year because of the trucking costs that are going up. We are going to see food increase prices next year. Now, so far, people have been willing to spend the money. We are beginning to see that purchasers are looking for cheaper food products. Maybe they're going to go generic. Maybe they're going to buy more fresh ingredients. We'll see what happens next year. 2021 is a record year. We saw largest wage increases. We saw the largest increase of cash. I mean, we're talking about trillions of dollars just sitting in people's bank accounts. I think 2022 in comparison is going to be a calmer year. Markets should still rise, but not to the craziness that we've seen. Food prices are going to go up, but that should work itself out throughout the year. 2022 is still an unknown as we finish off 2021, but everything is looking like it should be a good year. It's going to come down to what happens in the markets when Powell actually raises interest rates 3 times next year, and how do consumers react when their food prices go up 10, 15, 20, maybe 30% starting at the end of the first quarter. That is a big unknown, but check back here every single week as I give you the truth behind what's happening. I'm not going to start out with a headline that says pessimistic about the stock market when I'm still optimistic about it. I'd be happy with an 8% return next year. I don't need double-digit returns. You don't need double-digit returns if you do proper financial planning. So make sure you subscribe so you can check back every week when I post my 1 to 2 new videos. Make sure you leave comments down below. I appreciate the comments. I read all of them. I try to reply to as many of them as possible, and give me ideas for future videos. I hope 2021 has been great for you. I'm looking forward to a better 2022. Thank you for subscribing. Thank you for watching, and I'll see you next week.